those 2 weeks of pressure. We got down to about a 4.5% pullback from the peak. So is that enough for now? We'll see. This could just be, going back to the upper end of a trading range. But last time it didn't take much longer than 6 weeks of this kind of range before you busted out of it to the upside. So right now, it's low volume. I usually don't make a fuss about very light volume. What it does tell you is this is much more about sellers not taking the opportunity to jump in with the S&P at 4,200, at least not yet observably. But again, NASDAQ 100 here, obviously the laggard by 12 or so percentage, by 6 or so percentage points year to date. Take a look back here, March, April, when you had that pretty big gap between the Dow and the NASDAQ 100, kind of widened out, banks leading, tech down. Well, here you have it again. And so maybe this is another little catch-up move by the NDX. It was not a return to leadership, really, in an enduring way for the big cap growth, but they still stay in the game and support the market when the rest of things like banks are down today, when they're not working quite as well. Take a look at credit conditions. While this is the case, very long-term chart, going back just about 30 years, very loose credit conditions, pretty much as loose as they get if you go back over time. As long as this is the case, it's very hard to see really a lot of stress building up and a lot of disorderly sell-offs. You have this rotational stuff, you have these little unwinds in speculative pockets, but the overall market holds together. Just one point, though, it can change fast. That was 2010. You had this huge relief, better credit conditions after the great financial crisis, and then they got tighter, really, in a little bit of a market scare there. So it's not like a permanent state of events, but basically it is a pretty good backstop on risk appetites and asset values, guys.
It really feels like the tech trade increasingly is tied to yields and the inflation debate. And a lot of people are noting today that the 10-year break-evens, which is a good measure of inflation expectations, had a big drop last week, more in line with the Fed thinking.